Testing 1, 2, and 3, and we have that live Apple coverage. It's here and it's now. Look at this big long weekly wick right up here at 600. Now let me just tell everybody that you will buy it off of that support level and sell it right back into that rip, because there's, the old news is circulating. The headline to get this gap from 585.57 up here is going to be the dividend. Yes or no? So when they're going to have a conference call this morning, and at that point in time, that would trigger the mutual fund managers right into the name, because a lot of them are mandated, and if they don't have a dividend yield on the end, it has to have that cap there, is that they can own it now. So there would be, a part of the community of Wall Street would be buyers, natural buyers, but they're buying up here at the highs, MMTs. 599.40, and this is live 599.74 with a 585.57 closing bell. And what is the range going to be? Last week, what we did, here's this wick, okay, so here's the gap, here's the weekly wick right here, and you can see the chart, of course, is going to show you parabolic is parabolic. And yes, it's a great company now. As I've always taught you, as I said, you could trade up to 617.50, and if you can get past that area, of course, that's a major area up there. I'm not saying that you're going to go there today, but I am saying that once you clear that price, you could see 629 and some change very quickly. However, it remains elevated on a level where you get the kind of shorts that you got 2 days last week. The intraday range reversal from those exhaustion price highs. And why that trade, that transaction, sliding that previous bar, sliding that bid, but then having that system that goes with it. And how to identify the price scripts within the EC model. ECNs, they're called electronic communication networks. Match buyers and sellers. They're loaded. Look at here's ARCA. But they match them up. So the thing about it is the mathematical price scripts are going to hit the upper end of the range and still look for the same very key intraday reversal highs as you did last week on those 2 wonderful short days from that price exhaustion area. Now, the stronger the bull gets in the trend up there is you start to see where the price volatility reversal is greater in price value. Another thing we're going to be looking at is this weekly put option on Apple. 1,077 contracts traded on Friday, closing 24.20 was the previous day, but the last print says $23 right here. Okay? And the high was $26.75 on Friday, and the low was $20. And they were buying them up. Let me just show you in here where people were buying that 580 put. That was 9,500 contracts. And this is all weekly. March 23rd weekly. Let us be clear that the March 575s below the market had 6,000 traded. So here you can see this area, and you also had the 585, 6,000. MMT, 4,300, 4,200 right here. At the 560, there was a lot of put activity. That's a lot of contracts to be going against such a strong bull unless you know how to do it intraday now. You got to remove your risk in the wholesale bid. Yeah, you got to know how to get the entry to start with. So let's make that clear. MMT, last print's $23. As this thing shoots up and we buy it net off support level long, take it up to the highest level, unload it, get short, and buy that put down on that markdown. They don't mark them down a big, but I'll tell you where we're going to run our bids. We're going to get down there below that market right around 750 by 790. That's that low end of the market. Of course, I'm going to have you set alarms at around, let's say, so you know when it drops below 1450, you're going to get triggered. And if it drops then at that point, the next level you're going to be looking at is going to be right around that 12.7 handle and below. And then you get down to the 1040 area, $10 in range. But I'm going to have you put a weekly bid out here. If we go up in the trend higher here, that's that lower end of that market. Of course, you can set alarms at 960 by 1020 also on the lower end here throughout the week. At least you'll have your alarms ready, MMTs. It's here, it's live, it's now, it's 5:36 a.m. It's Pacific Standard Time, 3/19/2012. How about that? And we're here to make a market. And we're here to trade it as high as it wants to go and then get it short up there at those highs. Last week, big pairs. We weren't wrong about it because it's all done intraday on price exhaustion. Nobody said that you were going to buy and hold it for 10,000 years and whatever a lot of people's minds may want to perceive. Maybe you do a little self-examination. It was intraday, pal. So let's keep that straight. And the results speak for themselves. When we get up to the higher end of the range, there will be other put options that you can look at. We're just going to benchmark these bid and ask within the weekly time frame in a weekly call and put structure, meaning that we'll be looking at the calls on the call side of it too, because there was a lot of calls that were bought. And the one that we will look at specifically is where the 12,000 calls came into play. And we're going to go right over here. Bingo. And we're going to take a look at that. There it is. There's that $600 call. And the volume was 12,000. Last print was $8.15. The range then was $4.05, it looks like. The high was $9.49 and that low is $5.40 now. You can tell that markdown of that low is where we always get them wholesale bids down around here, probably around 560, 70, somewhere in there, depending on the individual's ability to execute. High 9.45, they got marked down. So, but that's that range. These are dollars. So when you're buying $5 wholesale, if you're buying $4 wholesale, you're saving $4,000 in your entry risk, your dollar cost capital risk entry. And MMTs, it's very important that you understand that. So when I'm buying $4,000 wholesale, I can sell it back for $2,000 profit easily. That is if I have the right equity and I understand how they steal the premium on both call and put side, how they get walked down and what all the intrinsic mechanics of that is within the bid and ask structure of you taking advantage of those entries at those wholesale bids and then dumping them back off to the public side of things. Okay, and what does that mean? You sell it back to someone else at the higher prices because of your wholesale entries. So we will be monitoring the kind of premium that they add to the $600 call on Apple on a weekly contract. So let's keep our reality point straight as to what we're doing and what we're looking at and why we're looking at it. 12,658 calls were traded. We're going to be taking a look at the $600 put. It's the same strike price, which is okay with me and you. They're both going to have a premium. That there's going to be a premium inside of here. Here's the Apple trade right now. And so we know that if this thing runs up north of 604.50 to resistance levels, then we know that the $600 put is going to get marked down, and that right over here where my cursor is, this side of the market's going to get marked up in an inflated price area again. Okay, we're just going to see how much of that price action within the market maker pit of how they price them on that opening bell. So what kind of yield do they steal? I shouldn't use that word. What kind of yield do they take away from the public? And where would be your market? And where is your wholesale entry and your retail exit? Ask yourself that. Thank you. Now, relative to the price equity movement, relative to what kind of premium on day one of a weekly contract. Remember, weekly contracts came in 2011. They started introducing the idea, and it's another part of the market and has been for quite a while. Now, in bull runs, do they sell the rally? As most people understand, even some of the highest degree of people have had a hard time by letting Apple get away from them in price, and that crowd of the people start coming in and buying that dividend yield. That's why in the shorter term now, very short term, even though that you're going to be an exhausted, what we call an exhausted, elevated, exhausted price range. The altitude of the price is going to have those reversals like you've seen last week in Apple. And you had gapped up 3 days in a row from the bottom of a price breakout, daily gap ups. And on that third one, bam, that's when it started having a problem on the intraday highs with those reversals. MMT. Once again, it's a special on how to make a market between the bellwether Apple computer on the date of 3/19/2012. Let us not forget, it's pre-market futures. And pre-market futures, people use that market to square their opening first positions of the first hour of the day. And it's very powerful to learn that first hourly trade and master it, because once you get that down, you can actually master that entry and that exit and leave with the profit. But if you're really making a market, why would you want to leave? That didn't make sense. A lot of people like to limit themselves. Most of that is out of their own confidence level. Now, we're going to be watching what part of this wick right here is going to hold as support level, MMT, and I'm going to draw you a trend line. Remember, the market is pre-market right now, and we're going to open up in 45 minutes. Okay? So what we're going to do is I'm showing you what we call, if you take a look at 600 down here, to the very bottom of that, that's about, let's take a look. So right here at the bottom, okay, so you got that 585, there's that same wick coming back to these highs on a gap open up sequence from 585.57. Now, let us not forget that you got 780,502 shares traded. Okay, now, pre-market volume sets the tone for that opening bell, MMT, between the public and the exchange model. That's what we are. That's what we specialize in, is pricing on entries and exits and the training as a market maker. Now, having said that, we're going to be watching this bellwether here. I'm going to conclude, that's the Google one up here. And how does Google get back up to the short? We took this thing all the way to 670 and shorted it right on the high. And we were, and yeah, that was buying it down there around 580 area and taking it up there to that 670 and then dumping it short. And it went all the way back down. It's finally coming back up after its quarterly earnings. But listen, it's not as overbought. Amazon.com is another one today that we look at, because Amazon has a downtrend from, every time it gets up toward the 190 area, 191, it comes right back down, and it has a very, if you really look at the price range script over 5-day periods times monthly, you'll see exactly what I'm talking about, MMT, and no one knows it better. We have someone that's on this one every day. Now, we're going to stick with the original plan. The original plan is that we're going to take a look at each one of the gap open up sequences in pre-market in the next 45 minutes. And we're going to get all our pricing levels down before the market even opens up. You see, if you can do that, which there are very few people who can, bring them here. Tell me where the bid's going to be. We'll see who's closer. We have the SMF Pro Challenge. Everyone's welcome. Price exhaustion. I drew trend lines the other day in our Sunday training, and I talk about price line getting up to 681. Here it is. I talk about price line as strong as it is. It will have a reversal within this weekly trading range. There's going to be one good day, and it doesn't matter which day, just be ready for it. Could be the day. It's that exhaustion price opening up in price. So we're going to open up from right here's the ask and there's a close. Now that's called price open up. What do I call it? Exhaustion, meaning that there's 300 shares volume on price line in pre-market now. And that's the bid and ask range. So when you take the 575.50, I got 6, look at the ranges, 678.50 to 681.10. Okay, then you have that close is your common denominator to that bid. And take a look at the premium, 675.50 to 678.50. That's exactly mathematically 3.00 ratio gap, $3 right here. Now the ask, on the other hand, is 681.09. When they gap that up in price, that means that the price line puts, PCLN, is going to do what? They're going to go down in value. And the one that you're going to look at are the ones that we did over the weekend on Saturday and Sunday training sessions now. And yes, we did look at this one here. It's a 675 on how they would mark this thing down. Look at the range, 5.8 in this option, how to trade options, how to get wholesale, and then sell retail to the public. This is what you're trained to do. Now, on that 675, I've got the price line, bid and ask, and I already went over that. You can see the volume right here. 680 went off. 100 share, 100 share, 100 share, and that's a total pre-market volume now. Remember, we're doing this before the fact and going to get the price at that wholesale bid before anyone else. They're going to look at, well, what would I do? Oh, boy, I just better walk away from that. I don't know how to do that. No, you don't, because you don't know how they take premium away from you and how they on both sides, the put and the call. Doesn't matter. Here's a weekly call. This one's a weekly 675 put on price line that we're going to be talking about. And how to steal that bid. Put the bid out there at $2.70 right now at the lower end of the market on that 675 put. And we're done with that price line. Take a look at the upper end of that price target. Now, I just gave that bid out there, MMT, at 2.7. Last print was $9. And they were already marked down. So the people that were on the put side of this market, 103 contracts at $19.90, man, that's a big markdown to my entry at $2.70 on my bid. I'm going to make it right there at $2.70. Yeah, before the fact. Price line, special feature on price exhaustion gaps. Same rule will apply on the ISRG high beta volume 200. You could take a look at that. Beta is 527. That's $2 below the handle, and an ask of 530.33. Now, what do I do with it? They just, wow. That's what we do here. Apple just opened up and the gap is gone, I'm hearing. So these are the kind of plays that you're going to be looking at. And it's important that you understand it. And there it is. Bam! The gap is gone. The gap is gone on Apple. The gap is gone and the short is now. As said in this pre-market video, price exhaustion will get hammered. And it is live. Look at that. Get ready to buy the dip. Brian Plain, down at the bottom, he's got it right there. Start getting in. Take the share count. There's that big drop. It was way up above the 600 handle. Look at it right now. Pre-market, look at that baby get taken. Do you see that thing taken? Do you see that thing taken? That's what happens when they get weekly overbought. We'll have Brian Plain clip this out. That's how them shorts work. They didn't even give you to the opening bell. The time is 5:51 a.m. Pacific Standard Time.